Tushar Pradhan, Chief Investment Officer with HSBC AMC. Tushar, good to have you back on ET Now. Thank you for joining us. Tushar, looks like we are getting twisted from all the sides. Globally, risk-on trade or risk-off trade is at play. And if I look at local factors, benchmark indices are looking slightly rusty and mid-cap stocks have got disseminated.
Yeah, I think there is a definite feeling of gloom, but I think as we discussed earlier, markets usually tend to go through these phases. These are cycles, and if you were to believe that Mr. Market, which is always very paranoid, generally always either feels very euphoric or it feels very depressed. So I think at this time we are looking at a depressive market. But as you mentioned, I think it might be a very interesting time for longer term players. We always think that the prices are always wrong. So when we go to the market, we always complain the prices are too high. But when such an environment arrives, and this is, if you remember, I think the last year, people preferred India equities for the fact that the resilience in earnings, no matter what happens to the world, was something which attracted international investors. I think going forward, with all the measures that we are seeing coming through from the government so far, if this kind of earnings resilience continues into the next year and the year after, and this is not really very huge earnings growth we are talking about, we're just talking about resilient earnings, I think India will continue to remain attractive to the foreigners. So I think this might yet just be a great opportunity for longer term investors to keep looking at India.
Tushar, what's the sense though this time around from the budget? I mean, we're just 2 days away and a lot has been promised. Do you think it would be delivered, and would it be a game changer of sort for equities?
Well, it does definitely have a potential for it because as you've seen in the past, very high expectations of the budget have always disappointed. But whenever one gives up on the budget, I think something surprising comes up, and that actually lasts the market for a significant momentum afterwards. And that has always been the play so far. So I think this budget has been discussed quite a lot even before it's been presented, and it appears that the headlines have been made aware to the larger group much before the time that the budget has actually been presented. So if it is on the lines of what we have expected, I think it calls for a very pragmatic budget to be put. One of the first things that comes to mind is, of course, the fact that there has been a lot of caution on costs and spending initially. So this has been something which is a very, very large departure from the previous budgets, where spending always is a sacred issue and nobody really stops spending in any way. But I think with the overall economic scenario, I think we need to kind of rein in the spending, and that's the only way we can balance the budget. But having said that, I think the other side of the story is that if you do continue to cut planned budgets successively, then it does have a very negative effect on the economy because we are spending less money for the economy to develop. So at the best, it might just be a tactical measure, but it should be followed with some strong statements like that once the growth comes back, spending will then have to increase. So I think it's a balance that everyone will try to do. I think if there are good statements, positive affirmations, I think that this also might be a trigger for the equity markets.
Tushar, the new defensive for Indian markets is not FMCG or pharma, it is IT. Large cap IT stocks for this year, they have been marked outperformer. At the current juncture, how exactly would you map the risk reward ratio for large cap IT stocks?
I think the large cap IT space is driven by the events in the US largely because most of the IT sector is exposed to the US. The housing data and followed by some pretty good economic data coming out of the US has meant that a lot of corporations in the US who anyway are cash rich will not cut IT budgets this year, and there might actually also be a slight increase in discretionary spend. Now that really means pretty positive news for the IT sector in India especially. Also, you have to remember the last year was not a very good year for the bellwether companies except for maybe one or two, and that has to see some sort of reversal. If you look at the resilience in the earnings in this sector, given the fact that there were many fears whether this kind of arbitrage is going to go away, I think that has convinced a lot of people that this is a safe place. But of course, if, as you mentioned, the global gloom starts to envelop the US and the first positive data that we've seen from the US now starts to crumble as well, then this place too will see its own kind of correction. But I think on the whole, I don't believe that budgets get readjusted through the year. So which means that if the positive news from the US continues for a while, I think Indian companies may report yet pretty good profits for this year as well.
Tushar, do you expect anything special from today's railway budget, and how exactly do you think the railway minister will balance financial prudence and populism?
Well, the toughest role, I guess, for the railway minister is to kind of balance these two events. One has to also understand that we are going in for an election, and most of the electorate largely will definitely be train travelers. So I think that's a strong message, and it's difficult for fiscal prudence to emerge through all of these environments. But we've seen some very difficult decisions having been taken in the past, and one of the titles or the headlines I quite liked to hear was, after these difficult decisions were taken, the title said, well, it wasn't that difficult, was it? So it just tells you that maybe it is in the minds of most people that these are very difficult decisions. But we have seen them taken in the past. And I think if the government really means its reform agenda to go through, then I think they may yet make a departure from the past and not make it too populist. That's our hope. But I guess at the end of the day, it is still a very, very difficult balancing act.
Tushar, anything interesting in the mid-cap space? What exactly are you nibbling at, or what exactly are you planning to buy from the wreck of the mid-cap space?
Well, I think we've had a very wide range of companies to choose from. And I think what comes up repeatedly over cycles is that if you choose companies which are resilient in their business areas, which have some sort of competitive advantage, and they continue to score very high on return on equity, then no matter what happens to the mid sector, or let's say the mid caps or anything like that, these companies don't lose valuation. So while you have a very significant correction in companies which may have weak fundamentals, generally people associate that with being in the mid cap area as risky. But I think within those, if you select companies which definitely do have what is called as an economic moat, which means that they have some sort of competitive advantage across all the other companies, those companies tend to give you returns which are significantly higher than the general rate of return over equities over a long period of time. Just to give you an example, there are companies in the paints area, for example. Asian Paints is one example. Just to give you an example, the fact is that these companies used to be mid caps 6 or 7 years ago. And the fact is that in a country like India, it was just dominated by 4 or 5 companies. Just should give you an inkling that at some point of time when we talk about this GDP growth, these companies will definitely become very, very large, given just the fact that they are playing in a very, very limited market across competitors. And as the market expands, each of them will have a very large share of the increased revenue that will accrue because of the GDP growth. So I think you have to look at mid caps from that sense.
Right.